The biggest news of all, China and the US will meet in October to talk trade.
Well, we also had US non-farm payrolls on Friday night. Jobs growth falling short of expectations. US employment with June and July figures also revised lower. So where does this all leave our central bankers? Well, Wall Street Journal senior economics writer James Glynn joins us at the desk. James, take us through Jackson Hole, because the trip that Philip Lowe and other central bankers made to Jackson Hole last month, what does that mean for interest rates here?
Well, Tikki, in 33 years of watching central banks, I've never seen anything like it. We had Bill Dudley, we had Stanley Fischer, two former Fed officials and senior spokesmen for the central banking community, ripping into Donald Trump directly. I've literally never seen anything like it. And the level of antagonism between the Fed and Trump at the moment is sky high. And I think what that will do is it's adding to the uncertainty that the trade war is producing. And all those central bankers at Wyoming later went to an Asia Central Bank meeting in Shenzhen, and all the meetings were dominated by one topic, the trade war. The trade war being the immense amount of uncertainty it's generating. If you're a multinational company at this moment and you're looking to invest, why would you? So
does that mean, on the one hand, we've got slightly better news, perhaps, in that there's meetings between China and the US in early October, but on the other hand, if you look at Donald Trump's tweets and how abusive he is to Jay Powell, at the chairman of the Federal Reserve...
I even had one senior central banker say to me that it raises questions about Powell's personal security. If the president is identifying him as enemy number one, who's it, China, or is it the Fed? It's a totally ludicrous situation, and I just think it stirs up more uncertainty in an incredibly uncertain world. I take your point that we are going into trade talks next month, and that may yield something warm and fuzzy. We may all come out of it feeling great, but for mine, the damage has already been done. Again, if you're a multinational company and you're going into... perhaps you're considering a $100 million plant machinery equipment investment. Let's just put it off. I know we're going back to these trade talks, but there's every risk that another tweet will come out and just blow it out of the water. So why would you? And if you're not investing, you're not hiring, and we come back to this talk that is growing and growing and growing about US recession.
Is this the greatest threat in terms of behaviour by the president to the US economy thus far, do you think? There's been a lot of hyperbole, a lot of talk about, you know, his tweets, etc. But some of his actual behaviour, people argue, well, it's net good for the economy. This, however, does seem to pose a real danger.
Well, it casts a shadow on the Fed. It has to act independently. It has to make its decisions based on sound economics. If there is a perception that it's acting in response to the White House tweets, certainly in the markets falls away, all kinds of decisions start to break down, and you end up just adding to this pool of uncertainty that the trade war is already fueling massively. So I would say it's probably not the biggest one. I would say the way the trade war is being conducted, the State Department has been pushed aside in favour of tweets. That's basically what's happening. Donald Trump tweeted on the eve of the Jackson Hole conference, and China responded with its own measures, while these very powerful men and women are gathering to determine how is it we're going to support the world economy in the next...
So pulling it back here, because, of course, Phil Lowe, governor of our Reserve Bank, was there.
He was.
But there is you know, there's obviously this strained relationship in the US between the Commander-in-Chief and the central bank. What's the relationship between Philip Lowe and, you know, our government in particular? Take us through what Josh Frydenberg is doing to sort of get this new agreement.
Yeah, well, so it's 4 months since the election. Financial markets have been told that there is a discussion about the 2 to 3% inflation target. OK, so immediately their ears prick up because that anchors...
To pull it down?
Well, we don't know what exactly what's going to happen. I would rule out they're actually going to change the band. Just push that aside. Josh Frydenberg told us this week that nothing radical is coming, so that's okay. Nevertheless, there have been reports suggesting that the bank is now going to have to please explain if it misses the target. Fair enough. I think the RBA goes to great lengths to explain why it has interpreted the target fairly loosely.
But doesn't that put the RBA under pressure? I mean, to ease a bit more and to maybe think about...
Well, it could. I think mostly it's just the normal tension that exists between the RBA and a government. If you go back to Glenn Stevens and Peter Costello, Glenn Stevens raised interest rates on Peter Costello in the 2007 election, which was subsequently lost. Glenn Stevens was acting out of his own powers there and did the right thing. But nevertheless, what I'm trying to say, there is a normal tension between the government and the RBA. And this is actually, it's just an interesting story at the moment. 4 months in, we don't know what's happening exactly to the target. And I know for a fact some of the people in the markets are starting to get a little bit nervous.
James, just quickly, were you surprised to see rates on hold, and do you think we'll see another cut towards the end of this year? And how far off are we from QE?
OK, I think some of the people in the market are underestimating how close we are to another rate cut. Had the GDP numbers been a little bit weaker this week, they'd be cutting in October. Absolutely, they'd be cutting in October. You go back to Monday, and there was a talk that we were going to have a negative quarter. As it happened, we got out of that problem. I think November that they will cut, and I think QE will kick in at about 50 basis points from here, which actually is going to take a lot of explaining for the financial markets because we've never been in this territory before.
All right.